We get a lot of questions, especially from new business owners, about bookkeeping requirements, financial statements, what records do they need to be keeping, what do we need to prepare the tax return, that kind of thing. So I thought I'd talk about that for a little bit. Hello, Matt Bannon here with Granite Point Tax Group, and we're going to talk about financial statements. This isn't a crash course in CPA audited statements or anything like that. This is just the basics for the newbie, so to speak. So I always tell my clients, their first question is often, what do I need from them in order to prepare the tax return? And I generally reply that whatever works for them is probably going to work for me. I mean, we can work with everything from a garbage bag full of receipts to full-blown audited financial statements. Now, we prefer something closer to the financial statements than the garbage bag of receipts. And after you see our preparation fees, you'll probably prefer something a little more organized than the garbage bag full of receipts as well. So let's talk about that. You could work with any number of programs, even Excel. A lot of people use Excel, Quicken, QuickBooks, Peachtree. A lot of animal breeders have specialty programs that track the animal vaccination history and whatnot, and also will track the financial side too. So what do you need to keep track of? Well, you should be tracking income, what comes in, expenses, what goes out, where those expenses are going. In other words, what are you spending your money on? Basically, you just need to be able to look at some kind of report and determine how the company is doing, where the company is spending its money. Can the company improve by cutting expenses anywhere? Whatever is useful to you will probably satisfy just about anyone. So to that end, all you're really looking for is a way to categorize expenses, income and expenses, into groups that make sense for you. For us here as tax preparers, we try to track office supplies because that's a big category for us. Software expense is very large for us. Equipment, we track, although once we've bought our initial equipment, there's not a lot for us to keep track of after that. But postage is a big deal for us. For other companies, postage may be no big deal at all, not even worth tracking. Just lump it in with all office supplies or something. Manufacturing companies would certainly want to track labor and materials, but also they may have various subcategories for shop supplies. At a mechanic's shop, I would imagine that even something as small as shop rags might be worth tracking separately. Maybe not. Just depends how much money you're spending in that category and how worried you are about keeping track of it, keeping tabs on it. So if you were to use something like Excel, you could just set up a spreadsheet with categories across the top, date running down the side, and just fill those in as you go. So on January 12, spent $28 on office supplies, goes in the office column. On January 18th, spent $40 for Quicken basic software, put that in the software category or whatever makes sense for you. Then down at the bottom of the spreadsheet, you can just total those columns and you'll have your expenses by category. Give that to your tax preparer, they're going to be pretty happy. Moving up from there, you could use Quicken, which basically does the same thing. It's just a database of all the expenses and allows you to run reports that categorize everything for you. You can run by year, by month, by week, by category. lots of pre-built reports. That's really what Quicken is. Moving up the ladder from there, you could use something like QuickBooks or Peachtree. These programs are a bit more robust, where Quicken will allow you to make a lot more mistakes, I guess. It's not very rigorous in double-checking your work. QuickBooks, if you say I received $1,000 in Quicken, you can just plug that in. In QuickBooks, it's going to insist that you tell it where that $1,000 came from. You can't just drop it in there. So better system as far as keeping track of everything, but maybe a little harder to work with for some people. I generally find, especially artistically minded people, prefer Quicken. It's just in a very generalization. And science, accounting type people generally prefer the more structured QuickBooks type of program. So your basic financial statements then, which everyone should have at least a statement of income and expenses, or profit and loss if you prefer to think of it that way, or net income statement. It means the same thing. It's just a report run from one date, usually the beginning of a month or a year, to another date, the end of that month or year or quarter or whatever. And so it says from January 1 to December 31, we brought in this much income, we spent this much in expenses, and our bottom line is X, $20,000, whatever. That report will, for the most part, should match your income tax return. There will be some differences, but for the most part, it'll be a pretty close match. After that, if you want to get a little more sophisticated, or if you have a partnership or corporate tax return to file, you will need a balance sheet. A balance sheet is a report as of a specific date, one day. Here are all the assets of the company: our checking account, our savings account, our equipment, any loans owed to us, our accounts receivable, etc. And below that, here are all the liabilities of the company: payroll taxes we owe to the government, loans we owe out, lease arrangements, whatever other liabilities you may have. Whatever's left, you have your assets, your liabilities, and at the bottom, what's left is the equity. So what the company is worth on the books. It may be worth more than that in reality, but financial statements should generally be actual cash paid, their book value. That's completely different than fair market value. So generally, you're going to have balance sheet, profit and loss statement, at the very least, a profit and loss statement, and then just keep your receipts and all your backup documents filed away somewhere. Generally, you're going to want to keep those filed by category, not by month. A lot of people will have all their receipts for January, all their receipts for February, and so on. That doesn't work very well. What you really want is all your phone receipts, telephone receipts, all your office supply receipts, all your supplies receipts, so that you can just quickly go through, add them up, tie it to the financial statement, tie it to the tax return, boom, you're done. Any questions on this? Of course, as always, just give us a call, 503-208-3736. Thanks.